Has sustainable investing become a dirty word? In this episode, I'm joined by Gavin Francis and we cut through the noise. We unpack what sustainability really means in 2026, where the hesitation actually comes from, and whether performance concerns are really what they seem. If you're an advisor navigating clients' expectations, or an investor wondering whether this has a place in your portfolio, this is a practical, grounded conversation that you'll want to hear. Hi Gavin, thank you for joining me.
Thank you for having me. I'm appreciate the opportunity to talk about this topic, as you know.
I know, well, we'll see how you feel about it by the end of it, all right? But so for people who don't know you, tell us about your background and why is sustainable investing such an important topic to you?
So my background is in financial services. Been around since pretty much the early 90s in the industry. Mainly for traditional life companies and investment houses. And around the time of the financial crash the global financial crisis in 2008, it really made me rethink the purpose of investment and also my role in the whole industry. And I came across something called impact investing, which is investing for a positive social or environmental impact, an intentional approach to that type of investing, but also for a financial return. And it was something that really inspired me when I saw it, because it was so contrary to what we'd seen in the financial crash. And that was what I was looking for the next season of my career. And I was fortunate enough to be able to take a decision to step outside of the mainstream and start to look at how we could develop this as a market in the UK. And I set up Worthstone in 2010 and to focus exclusively in this area. And the rest is history, as they say. So that's what brings me here today.
Oh, brilliant. And before we start talking about this fully, what do we actually mean by sustainability in 2026? Because it means something very different to what people think it means. And I think people have got very confused about even where we are now. So what does it mean to you?
So I think, yeah, I agree. I think that the whole area of sustainability in terms of from an investment perspective has evolved over the last couple of decades, really. And we're much more aware now of the impact of our investments from a positive or negative perspective. And when we think about sustainability, we're thinking about all the positives and the negatives. So, there's no such thing as a pure investment. Everything is a compromise in an investment. There are good elements to it. There are negative elements to it. And again, it depends what frame of reference you're using, what filter you're looking through, what lens you're looking through, based on your own personal perspectives and life. And so sustainability means different things for different people. There are loads of labels and tags that are thrown around related to sustainability. I like the overarching term of responsible investment. So thinking about investment, taking a responsible approach to your investment journey. But yes, sustainability will mean different things to different people. And it's really important that we think about that when we're talking to the end investor, to understand what they mean when they're talking about, or whatever label they use or attach to it, or the way they think about their investments, whether whether it goes beyond the sort of intellectual exercise on a spreadsheet to what that investment is actually invested in and what it's doing, what the underlying companies they're invested in, what they're doing.
Yeah, I think it's very true, and we'll talk about it a lot, I imagine. But people go, "Oh, it's guns and tobacco." And it's like we've moved so much further away from that. It's about climate control, and that's much more where it's focused now, isn't it, when you think about sustainable investing?
Yeah, I think the other interesting thing about sustainable investing is, as you're sort of describing, it's fluid. So, a few years ago, the big thing was eliminating or excluding, negatively screening, those sorts of terms were used around some of what they called the sin stocks. So things like arms and tobacco and pornography, other, areas of the industry which people don't particularly like necessarily, or some people don't like. And the focus of sustainability now has evolved to looking at carbon footprint, the climate, and the warming of the planet, science around that, and what that means for investment, what the impacts of that could mean longer term, and how are the investments we're making as individuals, the ones that we want to be associated with, how they're impacting on those different areas. So it comes back to that point about, it'll mean different things to different people. But I think we're much, in our society today, we're much more aware on a whole load of different levels, and certainly around sustainable issues, we're more aware, whether it's, walking down the high street and looking at fashion labels or anything really. There's always a sustainability story. Well, there's usually a sustainability story attached to many of the leading brands now, when if you only look 5 years ago, it wasn't even really talked about or mentioned.
No, absolutely. So saying all of that, why is it still so cliquey and bespoke? People think, oh, you're into like it's still got this sort of stigma attached to it. Why is that when we all think about sustainability all the time?
Yeah, I mean, Helena, I don't know if we think about sustainability all the time, but it's definitely like front and center for a lot of people. Why is it still cliquey? That's a really good question. I'm not entirely sure. I think sometimes the industry can build a whole load of language and terminology around it, which can exclude people. It becomes very technical and, bitty, and politically it's been used, it's been sort of used from a political perspective as well. So you see it talked about a lot in politics. It's an area that can be divisive, I think, because of the politics involved. And I think just the nature of, when you become a specialist in anything, you almost want to exclude other people. I know more than everyone else, kind of thing.
Yeah.
And you build up these walls, and that's what happens. But our mission when we set up Worthstone was that sustainability would become a valued decision-making tool in every investment decision. So we think sustainability, you should be looking at sustainability across everything. It shouldn't be a clique. It shouldn't be a niche. It shouldn't be segregated as a strategy. Shouldn't you, if you think sustainability is important, shouldn't you be looking at it as a lens through everything you do, and particularly around investment?
Well, I think that's the point, isn't it? And you think about in day-to-day life, we all sort of behave, well, most of us, quite sustainably. We recycle, we do these things, and it's sort of, you just do it by default now. There isn't really a point where you think, I'll chuck this in the road or I'll do whatever. But we really do stop and think about it when it comes to investing. And I mean, why do we think that is?
I think it's because it's outside the norm. So it's outside of the regular way in which the profession has thought about it, the industry has thought about it, and it adds potential complications. It adds another layer of analysis which some people aren't comfortable with. There's an argument that the data around sustainability is not as developed as financial data, so there's a lot more contention around what's good and what's not. So there are lots of things. This is an evolving sector. It's relatively nascent compared to financial analysis, which goes back over 100 years. So it's developing, and I think we're also we default to what we know best.
Yeah.
And I think there's a potential as well that when you look through a sustainability lens, you might weaken the conventional wisdom around investment, and people don't like to enter into areas where they don't have enough knowledge or they don't feel confident that they know everything, and that's why the conversation becomes a little bit more guarded.
And do you think that's what the real objection is to it then? That people, when we talk about sustainable investing to people, they say, well, it's performance, it's price. Those are the things that come up time and time again. Is that what we think? That's it? That's the problem?
So I once heard this phrase used around sustainable investment, and I think it's it's really powerful, and it's very, very true. New ideas are always held to higher account than business as usual. And sustainable investment is seen as a new idea, even though it's been around, for a long time. Since, if you look at it from a negative screen perspective, like we talked about, that sort of ethical investment, that's been around since the sort of late 1700s, when the Methodist Church decided they didn't want to invest in anything that had exposure to those sort of areas that we discussed earlier. So it's not something that's new, but it's something that's seen as different to a traditional approach. And as I say, I think we're more frightened of it because we don't fully understand it, and it's a different way of looking at things. So we kind of park it sometimes when actually we should spend more time really understanding how it can help us to understand traditional investments as much as the objective of trying to achieve a good, highly sustainable return, a sustainable outcome.
Sorry to interrupt the episode, but this one's for the financial advisors that are listening. If you're thinking about the next stage in your career, ask yourself this: is your firm built for what's coming next? At Foster Denovo, we believe that the future advice is human first. Emotional intelligence built around real relationships. Alongside that, we invest in leading technology and AI that improves how you work. Less friction, more time with clients. If you're ready to grow your career in a firm that takes both people and progress seriously, you'll find the details in the show notes. Now back to the episode. And I suppose that's the thing, isn't it? With investing, it's not tangible, really, is it? It's not something we can touch and feel and all the rest of it. Whereas everything else that we do is. Like, we can see it, we can see the results, we can see the outcome. Whereas investing in itself is something of an unknown, because we can't judge it. We're never sure what's going to happen. So it gives it even more of an unknown when you add that extra layer on.
I think you're absolutely spot on. It's very difficult to prove that something is going to be sustainable in 10 years' time. So if you're saying, I want to invest for this positive outcome, we just don't know. We can be guided by data to say, this company in this fund are doing really positive things. They're investing in products and services that are going to help to alleviate some of the biggest problems we've got around the world. But are they actually going to be successful? Are they going to generate a positive outcome? We can't honestly, hand on heart, say they will. But isn't it the same with traditional investing, where you can invest in something to achieve a financial return, but it's not guaranteed? You don't know that that's definitely going to produce a positive financial return. So in some ways it's similar, but again, coming back to that point about the known versus the unknown, I think we are more familiar and more comfortable with the data around the financials than we are with the data around sustainable signals and metrics. And therefore we default, as you said earlier, to that traditional approach because it's something we're comfortable talking about.
No, I absolutely agree. And I think and I know that from my advisors and my partners in the firm. I mean, what I find interesting is, and we've talked about this before, but the demographic of our clients, as advisors, is changing. There is, wealth is being passed down into generational wealth. We're talking about a lot, the great wealth transfer, and clients see things differently, don't they? And I know you've talked about this before, but what is changing about what clients are looking for now with an age demographic and lens on it?
So I think, I look at a lot of data around client demand for sustainable investing, and most of the data I see tells me that younger generations are more inclined to want to invest with a sustainable tilt or a sustainable preference. So we were having this conversation earlier about Gen Z, millennials.
Yes, well, let's stop dressing up. It confused us a lot, didn't it? Because we weren't quite sure what everyone was.
But it's correlated. So the youngest are more inclined to have a preference for sustainability and to choose a financial advisor or investment platform based on the sustainability offerings that they offer. So that's clear. But I was pulled up the other day because I was doing something similar, and someone said to me, after we finished filming, do you really believe that younger clients are more sustainably minded? And this was a Gen Z. So and I said, yeah, I do. I've got kids ranging from 15 to 28, and they're all much more aware of sustainability than I was at their age. And that's the way I look at it. So I think the understanding and the preference towards that has definitely changed in my lifetime on a relative basis. And I believe speaking to young people and looking at the data, that young people are more inclined and do have a preference. Now, the sort of pushback on that will be, oh yeah, but when they get older and they've got a mortgage and they've got other things that they're thinking about, will that preference suddenly, die away again? We don't know yet. But I from the data I see, the younger generations coming through are definitely more inclined. And I think we need to look at, what else is happening in the world. So when you look at the way that most brands behave and what they're highlighting in terms of their marketing, a lot of it is around sustainability. If you look at fashion brands now, most of them are talking about sustainability, and they're aiming at that younger generation. They're not aiming at the baby boomers. So those brands are really highlighting sustainability over other aspects of their brand.
Oh, no, I think you're right. It's definitely changing. And I think you gave me a stat once. It was like 95% of sort of Gen Alpha or something were only wanted to invest in sustainable. And I thought, my goodness, that is, and for me, that's really key when you've got a firm of advisors, right? Because a lot of my advisors are quite anti the sustainable investing, as we know. You ask them, do you believe in sustainable investing? They go, no. And it's like, well, okay, well, what's that opinion based on? And it doesn't really seem to be based on much. Of course, performance and cost are always the things that come up. But we're at a risk here, aren't we? If we don't shift our mindsets from an advisor perspective, then how are we going to be servicing our clients in the way that they want to be serviced? Or are we just missing out a whole genre of investments that they would want to be looking at?
I think there's a real risk that even with older clients, if you haven't had the conversation, if you haven't even entered into the conversation, you could be missing an opportunity with any age group. Because in my experience, I've seen people who previously just hadn't thought about it because they hadn't had the time to think about it, or no one had raised it as a topic of conversation, who are actually really passionate about it now. And the only reason they're now passionate about it is because it was introduced to them as an opportunity. So there's a load of data around as well. People who are already invested may have quite significant amounts of money invested and don't believe they've got exposure to a sustainable investment, but they would want to have some exposure to sustainable investment if their advisor had introduced the idea to them. So there's a couple of things here, really, Helena. I think it's about professionalism. Like, do you want to do the best? Do you really want to do the best job possible for your client? And if you do, we talk about knowing your client. You really need to understand what their preferences are. And just because, let's say, I'm not that comfortable around sustainable investing because I think it's more expensive, or I think it's more volatile, or I don't think it's going to produce a financial return, that's not a reason not to talk about it to a client, because we also have different ideas around what's enough. What do I want to achieve from my financial return? Am I looking to maximize the financial return, or am I just looking to optimize the financial return? Is it all about making the most money possible, or are there other things that I care about that mean that if I'm not achieving the absolute maximum, and potentially even as someone who's interested in the market and looking at investments and things like that, I don't know what's the best return out there. But if I'm getting a return that meets my financial goal, even if that's slightly less or more volatile than someone else's return, I'm going to be happy if I know it's invested in the way that I'm comfortable with from a sustainability perspective. So I don't know if that makes sense, but
No,
I think
it does, because I was thinking about this, and while you were talking, I was thinking, we've got, and it is about, you don't have to be 100% sure. We are told, we have to talk about sustainable investing. We have to ask our clients that question. And if you're not well versed in it, or you don't believe in it, or you don't, have a solid background in it, a lot of people will just skirt over it. And we're also taught, you have to know your clients. We talk about the emotional intelligence, building relationships, knowing what they want. And if your advisor doesn't raise the question with you, then do you raise it with them or not? Or do you sort of, it becomes quite an awkward conversation. And then, as you said, are you actually doing the best for your client? Quite possibly not.
And if we just let's remove the word sustainability for a moment from the conversation. Yep. Advisors surely want to be relevant and current to their clients when you're having a conversation. So, and I'm gonna use a bit of an analogy here, but just work with me on this.
Okay, let's go for it.
So we're comfortable talking about, coffee, let's say, as an example. And if you look at the price of a cup of coffee today, if I'm getting a cup of coffee from the local barista down the road here in the city, and now I'm paying, if I want one of the fancy milks, so I like an oat flat white.
Okay.
I'm paying £4.80 for that at the moment, I reckon. And some places I'm probably edging even close to £5. I don't think we've quite hit £5 yet. I think there's a psychological barrier to that. But I'm pretty certain a couple of years ago I was paying just over £3, something like that. So there's been this huge increase in coffee, and that's as a result of the price of coffee beans increasing to probably their highest level ever. That is as a result of failed harvests over the last couple of years from Brazil to Vietnam, which are the biggest coffee harvesters in the world. And that is due to crop failure caused by changing weather patterns. So it might be too much rain in the rainy season when the blossom for the coffee bean develops, or it could be that the coffee plants aren't surviving in the same regions as they used to, so plantations are suffering and having to move. But these are all really relevant things, and this is happening to other crops and other areas of life as well. Now, that's all relevant, right? So that impacts our daily sort of what we do. And those things are relevant. So, but it's to do with climate change. It's to do with changing weather patterns, and that will impact on the investment world. That will impact on certain investments in the investment world. So if you're not having these conversations around these elements of things that are changing, and that's a really good way to introduce the issue of sustainability. If you don't want to kind of jump in there and go, do you like sustainable investing? It's like, well, look at the price of coffee today. How much are you paying for your coffee? Do you like coffee? Chocolate's the same. Chocolate, the price of chocolate's really increased, and there's been a real high inflation on that. So these are relevant topics of conversation today, and it points to the way that the world is changing and how sustainability is relevant to everyone, whether you want or have sustainable preferences or not. It's a factor that should be considered when you're looking at investments.
And it's a conversation that needs to be had. And even if, as an advisor, you don't fully believe in it, or your client may well do, etc., you say. And I think some advisors are a bit fearful of it because they don't have the breadth of knowledge that they think they should, whereas they do about their normal investments. So they can wax lyrical about, the things that they normally deal in. But when it comes to that and a client asks them, they sort of feel on the back foot. So therefore they shy away from the conversation. I think that's quite key. So, and one of the things that people think about is, right, well, I have to be in sustainable investing. And it's like, well, that's very dramatic. You don't have to be. It's not all or nothing, is it? It doesn't have to be all of your investments in it or none of it. It's we can have baby steps. We can start with, we talk about diversification of portfolios all the time. Why aren't people thinking about it from that perspective?
I think that's a really good point. I think that what you could argue is that from what we've seen of late, that sustainable investment has a different or is attached to a different investment cycle. So traditional investments behave in a certain way, and maybe sustainable investments are behaving slightly differently. So taking your idea there about, it's not all or nothing. Could we take a starting point? Let's just use an easy number of 10% of your portfolio, almost as a contrarian position to your traditional approach. Because as we say, sustainability is relevant, or we think sustainability is relevant. So is it worth just considering how the different behaviours? And the only way to find that out, because as we know, it depends when you invest, so your timing in terms of when you invest money into any of these areas, we can start to learn from our own investment experience the difference and what those cycles are. And cycles tend to happen over a longer period of time, so 5 to 10 years. But the best time to sort of start is now. But I think you're absolutely right around it doesn't have to be all or nothing. And I also do sympathise with your earlier point about advisors might feel cautious around an area they're not confident in. But I also really believe that if you're a client of an advisor and you're interested in a particular area, and let's talk about sustainability, I'm interested in sustainability, and your advisor says, look, this is an area that I would like to look into a little bit more on your behalf, because I'm not an expert in this area. I don't claim to be, but I would be really interested to look at this for you. As a client, I think I'd be
happy with that. I'd think, great, thank you.
Rather than someone trying to pretend that they know, or
put you off in any way.
Or just say, you don't want to be doing that for whatever reason, when actually you do really want to be doing that. Because you're going to think, if they say you shouldn't be doing that, you'll probably think, because you're already convinced, because you've been confident enough to bring it up to your advisor, you're probably going to be thinking, do they know what they're talking about? And do I really want to be using this advisor? Maybe I should be looking at someone else, looking for another advisor. So I don't think there's anything wrong with the humility that it takes to say, I'm not an expert in that area, but I'd like, this is what I do. This is what I do, even when I don't know about a particular topic that a client brings up, because you could bring up anything. I will go away and look into it for you. And I'm prepared to do that because I'd be interested to find out a bit more to help you. I think that's great.
I think that was great. I would be very happy if someone did that to me. I hate it when people just give me an answer and I know that they don't quite know what they're talking about. Right? Because you can kind of
tell. None of us like that, do we?
You can kind of tell that you're having the wool pulled over your eyes. And you're like, well, that's not okay. You mentioned cycles, and we talk about growth against value. So talk a little bit about how that shows itself when you're looking at the sustainable investment market.
So I think one thing you can say about sustainable investing is that there's, depending on how you want to approach it and what you want and what your preferences are, there could be particular themes or styles that are prevalent in a sustainable portfolio, more prevalent in a sustainable portfolio versus a traditional portfolio, let's talk about traditional portfolios as unconstrained. So there's you're not stopping investing in anything. You can basically invest in anything you like, whatever's available in the universe. Whereas within sustainability, you are slightly constrained in terms of what you're investing in. So by reference to that, you will have a slight, or depending on how, again, coming back, sorry, I'm jumping around here a little bit, but depending on where you are on that preference, you might say that I want a little bit of sustainability, but I'm not too worried about it, but I'd rather be investing in things that aren't creating the problems that, or exacerbating the problems we've got. Or you could be really saying, no, I just want to invest in renewable energy, for example. So there's a range of options there. But I think you will end up with something that's a little bit more style sensitive and thematic, which could be a good thing, depending on the cycle you're in, or it may work against you. So I think about it in terms of headwinds and tailwinds. There are times when a sustainable portfolio is going to have tailwinds attached to it. And there are times when a sustainable portfolio is going to have headwinds attached to it. And they might be different on a different cycle to a traditional portfolio.
Yeah.
So there is going to be that.
Yeah, no, absolutely. And what I took away from that is you still need to be in it. Like if you're never in the cycle, you'll never be in an up cycle or a headwind. Do you know what I mean? You've got nothing to show for it. So you should be in it. And as we say, it's not all or nothing. It's a certain amount of a portfolio, say 10% or whatever, to start. Let's talk about the elephant in the room, which is when we talk about sustainable investing, people sort of think it's a bit of a dirty word, don't they? They're a bit like, oh, like that can be the thing that happens. And that comes across from, I think, performance and cost tends to be the two big things that I know that my advisors will shout at me, oh, it's this, it's that. Has that become a convenient excuse now to avoid a conversation, do you think?
I think it's I think that's slightly lazy.
Well, what I said, no.
No, I've just sort of paused because I'm thinking there's going to be a lot of people now that are thinking.
I know that's why I wanted to bring it up, because it's what we hear all the time, and you do feel a little bit like, oh, if you say sustainable, people sort of give you a look.
Yeah.
There's a look about it,
So I think that just saying cost is the issue or performance is a little bit of a lazy pushback.
Mm-hmm.
And I think that it depends on the journey that you want to go on. As an investor, if I want to travel the fastest way to get to my end financial goal, there's a way to do that your advisor can to put you on a path to do that. But if I I have a sustainable preference, there's another way to travel, and I might be accepting of the fact that that's different to the most efficient, fastest way to get a financial return. So I think it's a much bigger picture than just it's too expensive or the performance is different or not as good, because it's not. It may not be not as good. It's different.
Yeah. And that's the key, isn't it? It's different. It's not as good. And as you say, I suppose, and it's an odd one because nowadays we're very happy to pay more for a product that we've been told is sustainable. It's not being, clothes are coming out of China. It's not, all of those things we're really conscious of and actively pay more to not be in that. And yet somehow when it comes to the investing side, we sort of go, oh, it's cost, which sort of plays against everything that we do in our normal lives. So I think you're right. I think it is a bit lazy. I think it's a bit of a cop out. The other thing that comes out a lot, isn't it, is, it's the political narrative that goes around it. What do you think about that? Because obviously this year has been a doozy on the political scale for sustainable.
Yeah, the whole political thing adds to the friction around sustainability, and it's become a bit of a football. I'm not going to sort of express a view in terms of the politics around it, but
I really want you to.
I think what I look at is you've got governments saying one thing.
Mm-hmm.
So there are different levels. You've got the government level, which influences things like macroeconomics and taxation. You've got, or specifically taxation and things and regulation. You've got what corporates are thinking and what they're doing. And then you've got us individuals and how we behave. And if I look at what's happened in the recent past, in certain areas, you've got very influential politicians and leaders of powerful countries having a view on sustainability.
I think we all know who you're talking about, Gavin.
And making certain, taking away things that have been introduced or introducing things to make life difficult around this whole sustainability piece. But then you've got corporates who are playing lip service to that. So having to take away certain statements that they may have made to comply or to not put themselves above the parapet to attract negative attention. But actually within those corporations, the things that they've done to make themselves more sustainable are not being changed. So policies, approaches, long-term commitments around changes within their business, the operations within their business have not been unwound. And that's because they've either worked out that actually it makes good commercial sense to do these things, or it's too expensive to now unwind it again. And again, from a commercial perspective, it wouldn't make a lot of sense. And maybe they're thinking, actually, the whole thing, from a governmental perspective, could change again in another couple of years if there's a change of leadership or whatever. So what I'm seeing is actually, even though there's a load of noise politically, the reality of the corporate world is not a lot is changing of substance. There may be some superficial changes, but materially there's not a lot changing. And then there's us at the bottom of the pile. How are we behaving? How are we changing? And I don't think, like, going back to that point around sustainability and how much of a profile it has on the high street, etc., that says to me that we're not changing in terms of our approach. I don't think we've suddenly thought sustainability is a whole load of nonsense and we've had the wool pulled over our eyes and we don't believe it anymore. I think that we still are aware of, the challenges we face in the world. And it may be that we just don't know what the answers are yet. And it is a big ask, right? There are some big challenges out there, and it's going to be expensive, and it's going to be stuff we're going to have to get our head around, and we have to work this all out. But we're kind of a little bit more educated around it. So I'm not saying that any of this is easy. I'm really not saying it's easy, but I do believe it matters to a lot of people. And so we should be talking about it. We should be able to debate it without falling out and getting political.
No, I completely agree. And I think that the lay of the land is moving. And I think it's interesting what you said about the political landscape, because people do use that as well. Well, this has happened and, America, and this is what, and then we spoke about what has gone on in China recently and how that winds are changing there as well. So I think it's another thing that people use as an excuse, or people use as a reason not to talk about it. And they just sort of make a sort of glib statement about something and just think, well, that'll do. I've covered myself now. What would you give what's the one sort of piece of advice that you would give an advisor then, if they wanted to start having conversations about sustainability with their clients? What would you say to them? What's the key Gavin Francis says?
I think you'll be more relevant to your broader client base if you're prepared to at least have a conversation or start a conversation to understand whether or not it may be a preference, or just introducing some of the areas we've talked about that reflect or signpost people to how sustainability might be relevant, to the broader macro picture, or even the sort of micro aspects of their day, like a cup of coffee. It's got to be. I think advisors will find that they get a fulfillment from talking to someone who they perhaps didn't think would have an inkling or any element of interest around this area, and they suddenly discover that actually that person's really passionate about this particular area. So even if it doesn't lead to someone wanting to invest sustainably, but they know something more about that person, like, it might lead to them understanding that that person's particularly supporting a particular charity or some element or aspect of their life that they're really passionate about that they just never knew about, but the advisor didn't know about before. It just deepens the relationship. So if you know more about someone, because sustainability is something that's a passion, it's not just a sort of practical thing. So you're getting to really understand a client. And I think that's quite satisfying as an advisor, because advisors tend to be people, don't they? So they want to know, they like getting on with people. So that should be something. You get to know your client better.
Yeah. So it's about having the conversation. It's not about all or nothing. You can start the process, and it's about knowing your client realistically.
Knowing your client and being relevant to that client.
Yeah.
Being current and relevant, because none of us want to be seen as irrelevant. So you've got to have an understanding of sustainability to be relevant now, I think. And also, of course, if you're fortunate enough to be dealing with clients coming through or the next generation, so your clients are passing wealth on and you gain a new client because you're then dealing with the next generation, that's growing your client bank, and they may be very interested in this area as well. So it's got to be a topic that people are comfortable just opening up a conversation about. It doesn't have to be entirely technical, but it's just relevant to the current things we're talking about today.
No, I agree. And well, I usually agree with you. So I think we've just cracked sustainable investing, have we not? Is that what's just happened, Gavin?
I hope so.
Amazing. Well, that's brilliant. Well, thank you very much.
Thank you.